Have you ever wondered why so many people lose money in the stock market? Why is it that despite all the stories of overnight millionaires, the average investor ends up frustrated, disappointed, and sometimes even broke? If you've ever felt the sting of a bad trade or watched your portfolio shrink while others seem to thrive, you're not alone. Today, we're going to pull back the curtain and reveal the real reasons most people fail in the stock market, and more importantly, how you can avoid becoming just another statistic. So grab a notebook, settle in, and let's get real about what it takes to succeed in the world of investing. Let's start with a hard truth. The stock market is not a get-rich-quick scheme, but that's not what most people believe when they first start out. Maybe you saw a friend double their money on a hot stock tip, where you read about a teenager who made a fortune trading meme stocks from their bedroom. It's easy to get swept up in the hype, thinking, if they can do it, why can't I? But here's the reality. For every success story you hear, there are hundreds, maybe thousands of untold stories of failure. The stock market is a place where knowledge, discipline, and patience are rewarded, and where ignorance, emotion, and greed are punished. Most people fail not because the market is rigged against them, but because they walk in unprepared, chasing quick wins without understanding the risks. It's like stepping into a boxing ring with a world champion after watching a few YouTube tutorials. You're going to get knocked out. One of the biggest reasons people fail in the stock market is a simple lack of education. Think about it. Would you try to fly a plane without learning how it works? Would you perform surgery after reading a blog post? Of course not. Yet every day, people throw their hard-earned money into stocks they barely understand, hoping for the best. Let me give you an example. Imagine Sarah, a new investor. She hears about a company that's about to explode and buys in without researching what the company actually does, how it makes money, or what risks it faces. When the stock drops, she panics and sells at a loss. What went wrong? Sarah didn't take the time to learn the basics, how to read financial statements, what makes a company valuable, or how to spot red flags. The market is a complex ecosystem, and without a solid foundation of knowledge, you're just gambling. If you want to succeed, you need to treat investing like any other skill. Study the greats, read books, take courses, learn the language of finance. The more you know, the less you'll fear and the better decisions you'll make. Now let's talk about emotions. The stock market is a roller coaster, and your emotions are the ride. Fear, greed, impatience, these are the enemies of every investor. Let's break it down. Fear makes you sell at the worst possible moment. You see your stocks dropping, and your brain screams, "Get out before you lose everything." But often, that's the exact moment you should be holding or even buying more. Greed, on the other hand, makes you chase after the next big thing. You see a stock skyrocketing and think, "I can't miss out," so you buy in at the top only to watch it crash back down. Impatience is the silent killer. You want results now. You check your portfolio every hour, and if you don't see instant gains, you jump ship. But the market rewards those who can wait, who can ride out the storms and let their investments grow over time. Let me share a story. John, a beginner investor, bought shares in a solid company. After a few weeks, the price dipped, he panicked and sold, locking in a loss. A month later, the stock rebounded and soared to new highs. If John had controlled his emotions and trusted his research, he would have made a profit. Instead, he let fear dictate his actions. The lesson? Master your emotions or they will master you. Develop the discipline to stick to your plan even when your gut tells you to run. In today's world, information is everywhere. Social media, news channels, chat rooms, everyone has an opinion and everyone wants to share it. But here's the catch. Most of these hot tips and rumors are just noise. They're designed to get clicks, not to help you build wealth. Remember the GameStop frenzy? Thousands of people jumped in because it was trending on Reddit. Some made money, but many more lost their shirts when the hype died down. The same thing happens with every new next big thing. Crypto, penny stocks, tech IPOs. The crowd rushes in, prices spike, and then reality sets in. If you base your decisions on what's trending, you're not investing, you're speculating. And speculation is a dangerous game. Instead, focus on building your own knowledge and making decisions based on facts, not FOMO. Let's talk about risk. Every investment carries risk. There's no way around it. But most people ignore this fact until it's too late. They put all their money into one stock, or they refuse to set a stop loss thinking it'll come back eventually. Sometimes it does, but sometimes it doesn't. Imagine you're driving a car without brakes. That's what trading is without a risk management strategy. You need to know when to cut your losses and move on. Setting a stop loss isn't admitting defeat, it's protecting your capital so you can fight another day. Professional investors never risk more than they can afford to lose on a single trade. They diversify their portfolios, they use stop loss orders, and they always have a plan when things go wrong. If you want to survive and thrive in the market, you need to do the same. Another common pitfall is overtrading. Many beginners think the more they trade, the more money they'll make. In reality, the opposite is often true. Every trade costs money, commissions, fees, taxes, and the more you trade, the more likely you are to make mistakes. Unrealistic expectations are just as dangerous. You see stories of people doubling their money overnight and think that's normal. But the truth is, building wealth in the stock market takes time. Warren Buffett, one of the greatest investors of all time, built his fortune over decades, not days. If you expect instant results, you'll end up disappointed and probably broke. Set realistic goals. Aim for steady, consistent growth, not lottery ticket wins. Remember, the market is a marathon, not a sprint. Let's talk about money management. This is where most people trip up. They put too much money into one stock, or they invest money they can't afford to lose. When things go south, they're forced to sell at a loss, or worse, they go into debt. Smart investors know how to manage their money. They never risk more than a small percentage of their portfolio on a single trade. They keep cash on hand for emergencies. They invest only what they can afford to lose, and they always have a plan when things go wrong. Position sizing is key. If you put all your eggs in one basket, you're asking for trouble. Spread your investments across different sectors, industries, and asset classes. That way, if one stock tanks, it won't wipe you out. One of the biggest mistakes beginners make is thinking short-term. They want quick profits, so they jump in and out of stocks chasing the next big thing. But the real money in the stock market is made by those who think long-term. Let's look at the data. Over the past 100 years, the stock market has gone up, despite wars, recessions, and crises. If you had invested $1,000 in the S&P 500 50 years ago and left it alone, you'd have tens of thousands of dollars today. But if you tried to time the market, jumping in and out, you probably would have missed the biggest gains. Patience is your greatest ally. The market will have ups and downs, but if you stay the course, you'll come out ahead. Don't let short-term noise distract you from your long-term goals. Imagine building a house without a blueprint. You wouldn't know where to start, what materials to use, or how to finish. Investing without a plan is the same. Most people fail because they don't have a clear strategy. They buy and sell on impulse, with no idea what they're trying to achieve. A good investment plan answers 3 questions. What are your goals? How much risk are you willing to take? And how will you measure your progress? Write down your plan. Review it regularly. Stick to it even when the market gets rough. Having a plan gives you confidence. It keeps you focused on your goals and prevents you from making emotional decisions. Remember, failing to plan is planning to fail. Let's talk about the psychology of investing. The market is a test of your character as much as your knowledge. Beginners often fall into psychological traps: confirmation bias, overconfidence, herd mentality. Confirmation bias is when you only look for information that supports your beliefs. If you think a stock will go up, you ignore any evidence to the contrary. Overconfidence makes you think you're smarter than the market. Herd mentality makes you follow the crowd, even when it's heading off a cliff. The best investors are humble. They know they can be wrong. They seek out opposing viewpoints. They learn from their mistakes. If you can master your mind, you can master the market. What's the secret to success in the stock market? It's not luck. It's not timing. It's not finding the next big thing. It's discipline. It's patience. It's a commitment to learning and growing day after day. Every great investor started as a beginner. They made mistakes. They lost money, but they didn't give up. They learned from their failures, adjusted their strategies, and kept moving forward. You can do the same. Don't be discouraged by setbacks. Use them as stepping stones. Every loss is a lesson. Every mistake is an opportunity to improve. If you take one thing away from this video, let it be this: the stock market is a journey, not a destination. Most people fail because they're looking for shortcuts, but there are no shortcuts to lasting wealth. Success comes from education, discipline, and a willingness to learn from your mistakes. So, start today. Invest in your knowledge, build a plan, control your emotions, manage your risks, and above all, be patient. The market will test you, but if you stay the course, you'll come out stronger, wiser, and wealthier. Thank you for watching. If you found this video helpful, hit that like button, subscribe for more, and share your thoughts in the comments below. Remember, your financial future is in your hands. Make it count. See you in the next video.